In today's video, we're diving into penny stocks trading around $1 and under, and I've uncovered a couple of names that are capturing serious attention right now, including Luminar Technologies near 95 cents and Microvision hovering between 92 cents and 98 cents. These aren't just cheap stocks, they're companies with real technology, real partnerships, and catalysts that could move the needle. If you want up-to-date, no-nonsense penny stock analysis, make sure to hit that like button and subscribe so you don't miss any of these breakdowns. I'm not a financial advisor, and this is not financial advice, so always do your own due diligence. Let's start with Luminar Technologies, ticker LAZR. This is a company at the forefront of LiDAR sensors and autonomous vehicle technology, giving cars the ability to see their surroundings for safer, smarter driving. Right now, it's trading under $1, around 95 cents, which is a dramatic drop from its highs over $10 just a year ago. That price action reflects a mix of cautious investor sentiment and the long timeline required for mass adoption of autonomous technology. But beneath the surface, Luminar is making moves, securing partnerships with major automakers and investing heavily in next-generation sensors that could soon appear in commercial vehicle fleets. Despite the challenges of slower revenue growth and tight margins, these strategic initiatives give the company a narrative that traders are watching closely. Its price swings make it risky, yes, but they also create potential opportunities for those who track developments carefully and understand the catalysts at play. Right alongside Luminar, we have Microvision, ticker MVIS, another tech-heavy penny stock trading just under $1, most recently between 92 cents and 98 cents. Microvision also develops LiDAR and sensing technologies, but it takes a slightly different approach by combining hardware and software solutions that extend beyond automotive into industrial automation and smart infrastructure. This niche focus on MEMS-based laser scanning technology gives Microvision a unique position in the market, aiming to expand into multiple industries that demand advanced detection and mapping capabilities. While its trading volume is modest, the company maintains enough liquidity to stay actively listed and attract attention from investors looking for under-the-radar tech opportunities. The stock has volatility built into its DNA, with earnings losses in its history and a revenue stream still in development. But for those watching the rollout of its technology, there's a story worth tracking. So why do these sub-$1 stocks matter right now? The broader auto and tech sectors are at an inflection point with autonomous driving, AI-enhanced hardware, and smart sensors taking center stage. Companies like Luminar and Microvision could see meaningful upside if commercial deployment accelerates or if they land design wins with major OEMs or tech partners. On the other hand, losses and near-term uncertainty keep prices suppressed, especially in a market where funding and growth costs are higher than they were in prior years. This duality is exactly what makes trading these penny stocks both challenging and potentially rewarding. The catalysts are real, but risk management is essential. Looking deeper at the numbers, Luminar's stock movement shows hesitation from the market, even as its technology remains cutting edge. The gap between current price and prior highs highlights both investor caution and the limited analyst coverage that often keeps small-cap names off the mainstream radar. Microvision's more diversified approach gives it a hedge against sector-specific volatility, applying its technology across automotive, industrial, and infrastructure markets. Both stocks demand careful due diligence, reviewing cash runway, partnership announcements, quarterly earnings, and potential growth catalysts before making any decisions. It's also important to remember the broader environment for penny stocks right now. While a price under $1 can seem attractive, the risk profile is elevated. Retail enthusiasm can drive rapid price moves, but it can also create sharp downside swings if sentiment changes. These stocks don't just move because of fundamentals. Liquidity, trading momentum, and investor psychology play a major role. Understanding that dynamic is key to navigating these opportunities responsibly. As we wrap up, think about your perspective. Does Luminar's current valuation represent a chance to play the autonomous sensor story at a lower entry point? Or does Microvision's broader tech application give it a more sustainable long-term runway? I'd love to hear your thoughts on which of these sub-$1 stocks has the most potential, so drop a comment below. Remember, I'm not a financial advisor, and this is not financial advice, so always do your own research and due diligence. If you found this breakdown helpful, take a second to like the video and subscribe for more timely, real-world penny stock analysis that keeps pace with market developments and actionable catalysts.